Good morning, good afternoon, and good evening, everybody. Welcome to today's Geneva Association webinar on inclusive insurance with a particular focus on advanced economies. My name is Kai Wischanz. I'm the Deputy Managing Director and Head of Research and Foresight at the Geneva Association, and I will have the pleasure of moderating today's session. Well, recent major challenges and developments have underscored the vital role of insurance as a safety net. Think of the COVID-19 pandemic. Think of the subsequent inflationary shocks in a number of mature markets. Think of the unprecedented geo-economic and geopolitical uncertainty as we are entering the year 2025. However, insurance coverage gaps continue to abound. They have been discussed and explored for a very long time under the heading of protection gaps. More recently, the focus has slightly shifted towards coverage gaps that affect specific populations, such as gig economy workers, such as migrants, such as the chronically ill. So the question which we are going to explore today, amongst others, is what can be done about those coverage gaps that are specific to certain populations. And I'm very pleased to be joined today by three preeminent experts and speakers, and I would like to invite them to quickly introduce themselves as well as their organizations. And maybe, Prudence, we start with you.
Thank you, Kai. Thank you for having me. My name is Prudence Ho, the Senior Manager in Research from the Hong Kong Insurance Authority.
Thank you, Prudence. Joaquin, you have to unmute yourself. Joaquin, you have to unmute yourself. Sorry.
Is it okay now?
Yes, perfect.
Okay. Sorry, I don't know what happened. Anyway, I was saying good morning to everyone, and thank you to the Geneva Association. Congratulations for bringing this important topic today. My name is Joaquín de los Reyes, as you said, and I represent MAPFRE. I am Director for Institutional Relations. But prior to that, I led an insurance business unit related to the project we call Senior Generations. We touch the elderly, which is very important and vulnerable population in Spain and otherwise in every part of the world. And this affects to the topic that we are going to be talking today. You know, MAPFRE is present in all 5 continents. We are currently the largest Spanish insurance company in the world, the largest multinational insurance company in Latin America, and we are the 6th largest insurance group in Europe by insurance revenue.
Thank you very much, Joaquin. And last but not least, Bob.
Good day, everyone. My name is Bob Watkins. I am with State Farm Insurance. We are the largest property casualty insurer for personal lines in the United States, both autos and homes. We're the leading insurer. I work in the legal department in what we call our Public Policy Resource Group, which is a group that works on tackling the public policy challenges that we face, and obviously inclusive insurance availability and affordability of our products is certainly one of those issues.
Thank you very much, Bob. It's very early for you. I think it's 6 o'clock in the morning, and for Prudence, it's 8 o'clock in the evening. So we have thanks to your flexibility, we have a truly global footprint today. Now, let me quickly move to the agenda for today. After the customary housekeeping information, I will share with you the key messages of a recently published Geneva Association research report on precisely the topic of this webinar that will be followed by a moderated discussion. And finally, we will have time for your questions, our esteemed viewers and meeting participants, for you to submit. If we can move to the next slide, please, for some Zoom housekeeping. As usual, our webinar sessions are being recorded. You are muted by default as attendees, And as I just said, you have the opportunity to ask questions. Please make use of the Q&A window. And if you need simultaneous translation, please click on the show captions window for assistance. Now, moving to the report, to the research report that we published very recently, I'm going to provide you with a quick overview. I'm just scratching the surface, but you find all the details, full granularity in the report, which of course is available on our website. I should also mention that the research was strongly supported by many global insurance executives and experts. And Bob, Joaquin, and Prudence were among those executives to whom we are very grateful. Now, moving to the next slide, please. The fundamental question to start with is, why does inclusive insurance matter to society? Not only matter to insurance stakeholders, but why should governments care, for example? And I think there are at least three reasons. The first reason is social and economic inequality, a challenge that has been with us for many years, for many decades. And insurance is a proven instrument to mitigate social and economic inequality by preventing people and families from falling into poverty or falling back into poverty in the wake of adversity. The second reason is, the well-known issues with public debt, public indebtedness, public budgets are under strain in most mature economies. That puts a lot of pressure on social safety nets, which are eroding, which continue to erode. And this creates a lot of space and need for private sector solutions to step in and at least to complement the eroding social safety nets. The third reason is migration, a major humanitarian challenge, but also an economic necessity for rapidly aging mature economies. And insurance can make a significant contribution to the financial inclusion of migrants and therefore to their socio-economic integration. Now, moving to the next slide, please. It's important to get a few definitions right before we start the discussion. Otherwise, there's a lot of scope for misunderstandings because people define key notions differently. So let me share our take on these definitions. Starting with the most frequently used one, the risk protection gap. This is the share of uninsured losses in total economic losses. This is something we generally use, for example, when discussing natural disaster losses. Now, the second definition, the insurance protection gap, is arguably more appropriate for our industry because it measures the difference between the amount of insurance that makes economic sense for both the insured and insurer versus the amount of insurance actually being purchased. And I think our industry should aim to close this insurance protection gap. The third notion is the insurance inclusion gap, a novel concept introduced by our report. Here we zoom in on coverage gaps, as I said before, which affect specific demographic groups, coverage gaps that we then compare with the level of insurance coverage across an entire population, across a reference population. And last but not least, inclusive insurance itself as a notion. Here we have two schools of thought, if you like. One is looking at this from a product perspective, so a suite of products. The other school of thought is more about dedicated approaches to inclusivity in insurance. The next slide provides you with an overview of a major global customer survey, which the Geneva Association commissioned to substantiate our research, a survey spanning 7 major insurance markets, 6 specific social demographic groups, and basically looking into 4 questions. Number one, we ask people, what do you have in place in terms of voluntary insurance? Number two, what do you need in terms of insurance or additional insurance? Number three, why don't you buy or buy more insurance? And number four, what do you expect from your insurers? And again, the detailed findings are available in the research report. The next slide gives an overview of the aggregate findings. So 85% of the entire sample own at least one of the 10 voluntary insurance products that we included in the survey, ranging from essential coverage such as residential property to more discretionary coverage such as mobile device insurance. It was also striking that two groups in particular are underserved compared to the reference population, namely low-income earners and Gen Z respondents. On the next slide, you see the results of questions that we asked to the uninsured portion of the sample. So to the 15%, we asked them, would you like to own insurance? And I think the findings are quite encouraging. There's a significant interest in owning insurance expressed by these underinsured populations, and Gen Z is standing out with the highest appetite for insurance. On the next slide, we ask the same question or a similar question to those who already own at least one insurance product, so the 85% of the sample, and we ask them, would you like to own more? And here again, it's quite encouraging, except for the elderly, more than 50% of the respondents said, yes, we would like to own more, or maybe we could imagine buying additional insurance. So that's overall, I think, a very encouraging outcome. On the next slide, we explore the barriers to buying more insurance. So the reasons for underinsurance, if you like. Let me focus on the two main items. Affordability, not surprisingly, ranks first. However, we believe that it has to be seen with a pinch of salt, because in many cases, this is more about perception than reality. And we know from a number of empirical studies that people systematically overestimate the true cost of insurance and perceive products as unaffordable, which in fact are not. The second most frequently mentioned reason is about the cost-benefit characteristics that people associate with insurance products. So the value for money, a very product-specific view, which I think also offers much food for thought for the insurance industry. Now, my final slide highlights 5 key levers that we can pull to unlock the potential of inclusive insurance, discussed in the paper. Starting with financial literacy, promoting financial literacy, not a new challenge, obviously, but what is really needed here, in our view, is a more concerted effort involving insurers, involving their associations, involving their regulators, and last but not least, involving government entities. Second, designing relevant products, particularly important, we believe, in the context of inclusive insurance, where we discuss specific risk profiles of specific population segments where mainstream off-the-shelf products are unlikely to be effective. The third one, facilitation of access. We all know what digital can contribute to enhancing affordability and accessibility, but we should not forget that digital divides continue to exist. So certain populations continue to struggle to access insurance through online channels. The fourth lever is an engagement with the public sector. I cannot overstate the importance of this aspect, which we will discuss later on with our speakers. So this is about stimulating both insurance demand and insurance supply through through dedicated public-private partnerships. And last but not least, trust. Of course, trust is the foundation of the insurance business model. Insurers sell promises. They sell contingent promises to pay, and without trust, it is impossible to conduct insurance business. But let me stop here and give the floor to our speakers. And maybe, Bob, I can start with asking a question, directing a question to you. Most insurance companies operate in free and competitive markets. I think this is a fair statement. So, in principle, there should be plenty of scope for innovation. How do you view the role of innovation in the specific context of inclusive insurance?
Thanks, Kai. We at State Farm believe that free and competitive markets allow human creativity to flourish and solve problems and inspire innovation. And in the area of meeting the needs of customers, this is no exception. And I'm going to give two examples of innovation, one an historical one and one a current day one. The founding of my company is really a great example of this. State Farm was founded by a retired farmer named George Mahurl, who was located in a small central Illinois town named Bloomington. And in 1922, the automobile boom was just starting. And at that time, insurance in the US was largely provided just by large East Coast companies who set their prices collectively in kind of a one-size-fits-all fashion. And George believed that rural drivers should not pay the same rates as city dwellers who had much more traffic to deal with and drove more frequently. And additionally, in those days, farmers didn't drive very much in the winter because the roads were muddy and terrible. So George created a company that catered to farmers and provided lower rates. And he also developed a 6-month renewable policy. And this made insurance much more affordable for those rural residents. And that niche literally exploded and rapidly expanded from Illinois to become a national company in less than 15 years. And the company even expanded internationally into Canada. And later, State Farm was able to use better rating to reach other driver segments. And by the 1940s, it was the largest automobile insurer in the United States, something that continues to the present day. Another example that's current is where we see innovation help meet the needs in challenging markets is through the development and implementation of resilient construction techniques. State Farm and much of the U.S. property casualty insurance industry are supporters of a research organization called the Insurance Institute for Business and Home Safety, or IBHS. And IBHS has developed a fortified construction standard for resilience to hurricane and wind perils. And the fortified standard can apply to commercial, residential, et cetera. I'm going to focus on residential because that's our market. And the fortified standard can apply to the whole home, or it can apply to just the most vulnerable portion of the home, the roof. And a third-party evaluator will determine if the fortified standard has been appropriately implemented in the construction. This standard is gaining widespread adoption in Gulf Coast United States states, and the loss experience from the fortified homes has proven to be substantially better. And voluntary market insurers are seeking out these properties, even in areas where there's significant catastrophe exposure. Generally, the homes built to the fortified standard cost substantially less to insure. And for existing homes, there's innovative public grant programs that help people get grants to retrofit their homes to the fortified standard. And there's also another innovation I wanted to mention, which is that for existing homes that don't have fortified construction, you can actually buy an endorsement. So when there is a loss, the loss can restore the roof to the fortified standard. So you pay a little bit more up front, but if you do have a loss, it will be repaired to this more resilient construction. So in this example, we had innovation in construction techniques helping bolster the insurance marketplace, which allows consumers to obtain coverage that might otherwise be unavailable. I wanted to quickly mention that IBHS has also developed something called their Wildfire Prepared Home Standard, which is new, but we believe will also help with availability challenges in areas that have been stricken by wildfires, which are driven a lot by the increasing impact of climate change. So those are two examples of innovation that I think are really relevant to this discussion that help meet the needs of the protection gap.
Thank you very much, Bob. These are great examples. Now, Prudence, moving to the regulatory space, you represent an insurance authority with a clear market development mandate. So, could you share with us, which the social demographic groups you are currently focusing on in the context of inclusion and protection gaps, and what are you doing to understand their needs, or rather unmet needs, and maybe most importantly, most interestingly, what can you do to encourage Hong Kong-based insurers to better serve those groups?
Thank you, Kai. I think for us, actually, insurance authority is still quite young. I mean, we just set up for 6 to 7 years. But research is the new thing to IA, I would say, because in the past, before an independent regulator, we are less focused on this. But anyway, because the topics today, it's about inclusiveness on advanced economy. I think for us, we are a bit more focused on, first, we target on mortality. Even though Hong Kong is quite good in terms of insurance density and insurance penetration. However, I think you may also know that some business from us is not only for Hong Kong people. It's not only done by Hong Kong people. We are also supported by quite a lot of the mainland visitors. So, I mean, we are also very focused on protection type insurance. So we did our first study on that. And later on, I mean, in the past few years, IA is also very focused on health. I mean, not only physical health, but also mental health. Let me speak slowly, one by one. We also quite focus on the physical health insurance products. So going back to 2019, Insurance Authority together with government, we launched a medical insurance products, which is voluntary. We call it voluntary, but actually this is supported by the government. Why this is quite, we also think this is also inclusive because, in Hong Kong, the medical system is mainly supported by the public system. So about more than 75% of the expenses is actually supported by the government. But similar to other advanced economy, we are also facing the aging populations. So people are living longer, but we're also facing the aging problem, the health problem. So during that time, we launched a voluntary health insurance products. We want to include more people to be covered by insurance, and also to help relieve some of the social burden. I think that is quite matched with the topics you just mentioned right now. I can quickly tell you that the fact is, in the past 5 years, the people who get private insurance cover their health needs, it's almost increased by 1.5 times. So that is actually one thing that we think we're doing quite well in terms of inclusiveness. And on the other hand, as silently talk about, but not only physical, but also mental, we know that about 1 out of 7 persons, they have actually mild to medium mental issues. So we also start from 2 years ago, we start to have some studies here, and we will for sure in the future, when the report launch, we will do something more inclusive for the mental health issues. Well, later on, I will also talk about some private partnership things, but quickly, I want to tell you guys that actually in Hong Kong, we are actually also very, very concerned about inclusive insurance.
Thank you very much, Prudence. I think these are very, very helpful insights. And again, I think it very much obviously depends on the mandate that an insurance authority has. And not in all jurisdictions, there's an explicit market development mandate in place. Now, Joaquin, turning to you, a very experienced market practitioner, let's address some of the practical opportunities and challenges of delivering insurance to underserved populations, and let's zoom in on the elderly. Of course, a group that comes to our mind given the rapid pace of aging. What is your experience in the Spanish market in addressing protection and inclusion gaps for the elderly?
Thank you, Kai. Well, we all know as the world population ages, mature economies, the ones we live in, face a growing challenge related to a very important segment of population that we all need to pay very carefully attention due to both its dimension in terms of numbers, as well as the qualitative importance it has in the economy. For example, here in Spain, and we're talking about people 55 years and over. In Spain, they represent 40% of the population, of the total population, and also they represent the 26% of the GDP in Spain, and the 60%, which is brutal, of the total domestic consumption. The question for all is how we are ensured, or we are going to face the financial security for this elderly population. No? In this context, inclusive insurance plays, of course, a crucial role. While often associated with low-income population or countries or developing countries, the concept of inclusive insurance is equally critical in these mature economies, especially for addressing the unique vulnerabilities of the elderly population. This demographic is expanding rapidly in time, particularly in countries like Spain, Japan, where nearly 20% of the population is over 65 years, a figure expected to reach the 30% by 2050. We all as insurers, we need to face both challenges and opportunities in addressing the protection and inclusion gaps for this group. Why this is important? Well, in mature economies, life expectancy is high, as well as the prevalence of age-related challenges. Many elderly individuals live on fixed incomes, and usually they are much lower than when we were all employed, no? This financial predictability is disrupted by unexpected costs, such as medical bills, long-term care needs, home remodeling to adapt their places to the 100 years life that we are all called to live. No? So there are many things that we need to bear in mind. Traditional insurance models often fail to address these challenges because premiums increase with age, which is a very important component. Certain risks are also excluded when you become some age or older, and the complexity of policies deters older individuals from purchasing coverage. These barriers create a protection gap, leaving a significant portion of elderly populations financially vulnerable. In these terms, inclusive insurance seeks to bridge this gap by making coverage affordable, accessible, and tailored to their needs. Technology has emerged as a game changer in inclusive insurance for elderly with digital platforms, policies that include telemedicine in health, which brings a much closer, it tries to strengthen the gap we have. And also we have seen many wearable devices that help to track all the health components. So, and some examples of inclusive insurance around the world, we can see very related to health, most of them In Germany, we have the long-term care insurance program mandated by the government. Also, we have the Japan's elderly specific health insurance program, which is a tailored plan designed to address the country's rapidly aging population. We have as well some digital, well, I guess the United States is full of examples of digital tools applied to the insurance. And also here in Spain, we have that broadener approach that MAPFRE has for this population, which is 55 years and over.
Thank you so much, Joaquin. You elaborated on the role of digital. So let me ask a question to Bob, which is focusing on the traditional way of distributing insurance, namely through agency sales forces. And despite the many gloomy predictions concerning the imminent demise of the agency sales force, it's doing actually quite well in most countries. So, Bob, based on your experience, and I understand you State Farm is running a huge agency network. Based on your experience, where do you see the specific role of agents, tied agents, in promoting inclusive insurance?
Thanks, Kai. I think agents can play a huge role in promoting inclusivity in very many ways. We want our customers to be able to interact and do business with us in any way they choose, and so we do have digital options and all of that. But the vast majority of our customers still elect to primarily work with our over 19,000 independent contractor agents who are located in just virtually about every community of size in the United States, and they typically have a staff of between 2 up to 20 people. So there are a large number of people who are essentially the bridge to State Farm in their communities. They're members of school boards and on city councils and in other roles, and they help build the community in a variety of ways. And one of those is through philanthropic engagement and participation. We have 3 pillars of focus: education, safety, and community development that we encourage our agents to focus on. So they're members of the community, and they also can, as they develop those relationships, they can demystify insurance and can definitely help customers develop the financial literacy skills that they need to select the right insurance coverage tailored to their protection needs and their financial budget. Agents can also work with the customer and company underwriters to reduce the risks that may enhance the insurability of their properties, for example. Agents can also help customers understand the relative affordability of life insurance to financially protect their families. Many people don't realize it, but State Farm is also the 8th largest U.S. Life insurer based on premium volume. So, and that came as the result of thousands of individual conversations agents had with their customers in their homes and offices to help understand that and develop that level of relationship that we referred to earlier. So we think agents can really play a very key role in this aspect.
Joaquin, more general question to you. We have discussed a few relevant barriers to inclusive insurance, distribution, for example. Which other relevant and significant barriers do you see in your Spanish home market, but maybe also in other mature markets MAPFRE is operating in? So you have to unmute yourself.
Yeah, sorry.
Excellent.
I said, I guess it's very important to view the issue from the customer standpoint or perspective. And despite the developed infrastructure and advanced markets in these economies, many individuals in the mature economies, many individuals remain underserved or excluded from the insurance. I would say the first barrier is affordability. Even in wealthy or rich economies, income inequality leaves many individuals unable to afford insurance. Remember that I said that as we age, premiums increase rapidly, and particularly for products like health, life, long-term care needs. Rising cost of living and lower incomes for certain groups make this challenge even worse or more complex. And many customers view insurance as a luxury rather than a necessity, especially when premiums seems too high compared to the perceived benefits they receive from the insurance. No, we were talking about a promise. Insurance at the end of the day is a promise. The second major barrier that I see is the complexity of the insurance. Insurance products are not often difficult or are often difficult for customers to understand. The language, the vocabulary, it's complex, and the policies are not easy. Many exclusions, leaving many customers confused about what they are buying and whether it meets their needs or not. This complexity creates mistrust. We were talking about the trust, which is the basic of insurance before as well, discouraging people from, at the end of the day, engaging or acquiring insurance products. A third barrier might be the digital exclusion, even when we have gone through 3-4 years ago about a digital breach strengthened due to the coronavirus, no, but it's a barrier. While digital transformation has brought convenience to the insurance industry, it has also created challenges for certain customers, that basically the elderly with low-income households and with limited digital skill or access even to the platforms. These customers may struggle to access online platforms provided by the companies, or simply they do not have the confidence to engage with those digital tools, leaving them excluded from many products and services we, the industry, provide to the market. And finally, I may say trust and awareness might be critical to get the confidence from the customers. They lack confidence in insurance, often perceiving them as profit-driven entities, and we are. No, but we serve a first basic end, which is social, and they don't see us as a partners in protection. And additionally, there is a lack of financial education or financial culture in many mature economies. In the elderly, this is the case. No, maybe they have the acquisition power to acquire the products, but they don't have the financial culture enough for them to trust in the products that we provide. Customer may not fully understand how insurance works, the risk of remaining uninsured, or how to assess the value of different policies. Without trust and awareness, individuals are less likely to seek out insurance or feel confident in their purchasing decisions. Addressing these barriers requires collaboration between, of course, insurers, regulators, and other customers' organizations. I'm pretty confident that if we all work together, we are going to be able to, well, at the end of the day, to make the customer trust and have confidence on what we represent in the social environment.
Thank you very much, Joaquin. You mentioned the fact that insurers have to generate a profit. This is probably the key to performing the industry's social purpose, and that leads me to a question for Prudence. So I think there's a broad consensus that inclusive insurance, in order to be meaningful, has to be economically and commercially viable. It has to be part of core business and not associated with corporate social responsibility, for example. So what can a regulator do to help the economic viability of inclusive insurance propositions, Prudence?
Thank you, Kai. I think it's about right now thinking about 5 to 6 years ago. The first time when we think about inclusiveness, it's about the mortality gap, and that's why we have the first research. I think Joaquin just mentioned about, sometimes inclusive insurance means not very profitable, I would say. So how to make it work? During that time, when we just set up, I just set up, we also have some digital insurers. We have the new digital insurers. we also launched the sandbox scheme, so the digital insurers, they can try to launch some new products, very protection type products. Of course, they should be very affordable. So, you know, in Hong Kong, term life insurance is not that common because we Asian people like saving. So, I mean, traditional insurers usually doesn't really keen on this kind of business. So during that time, we encourage the digital insurers to push the inclusive insurance. I think one of them is Autos Term Life. And actually, they're doing quite well, I would say, because in terms of the cost, digital insurers, they can be more competitive compared with the conventional insurers. So this is one part of the efforts we tried to make inclusive insurance viable. And the other things I just mentioned earlier, which is about a health insurance, the voluntary health insurance schemes. Well, I can't say this is only IA's efforts, but this is also the government's efforts. During that time when VHIS launched, the government grant the tax incentives to all those they buy VHIS insurance. So as what I said, the insurance actually, the VHIS is doing well, actually quite well. I mean, in the past few years, it's 1.5 times growth. Because that is actually one thing that we echo the government's policies. We really, as what I just mentioned, public medical system is dominant in Hong Kong. But with the aging population, the health expenses would be no doubt to keep rising. So I think that is also the government's agenda, wants to channel out, well, not really a good term, wants to divide some of the people they can afford a bit for their own medical expense. So the government also gives some tax incentives to attract all those people to pay for their own. You know, a very brief idea. It's I can give you some ideas. It's about the figures 4 years ago. 75% of the hospitalization is actually supported by the public sector. So only less than 10% is out of their own market or covered by employers, covered by our own insurance schemes. But I believe these figures will gradually take up, relieving the government burden. So I would say tax incentive and also some of the more competitive products can be shared by some digital insurers. I think they are, you know, we also observe that the young generation, I think maybe the Z generation, or I hope that I didn't take it wrong. The young guys, actually, they like to buy insurance through internet. They don't necessarily need the help from brokers or agency. For the simple products, I think this distribution channel may help. And this digital channel can also make it viable, commercially viable, because they are, in terms of the cost, they are more competitive.
Thank you very much, Prudence, and great insights, probably also for some of your fellow regulators across the globe. Let me before we open it up for questions from the floor, let me come back to public-private partnerships. I mentioned it in my short intervention. Joaquin mentioned it, Bob alluded to it. Joaquin and Bob, a question to both of you. What would be your advice on how to effectively build, but not only build, but also manage public-private partnerships? What can you share with us? Joaquin, would you like to go first, maybe?
Yeah, and I mute off now, so I can speak freely. Now, I would say, first of all, inclusive insurance for the elderly population is not just about managing risk. It is about dignity, and it's about peace of mind. And it allows seniors to age with confidence, knowing that they are protected against the uncertainties of life. And even more, it reduces the financial burden on families and the public welfare systems. And this is important because governments, insurers, and communities must collaborate altogether to address these issues, the issues of affordability, availability, accessing to the insurance products and services, and awareness. Public-private partnerships may, for example, subsidize premiums, while customers' protection laws can ensure transparency and build trust amongst the customers. And also community outreach programs can educate seniors about their options, empowering the population to make informed decisions. The barriers to inclusive insurance that we have commented are very important, but they can be overcome through effective partnerships between governments and the private institutions, the insurers. No, affordability. We already talked about the possibility of subsidizing premiums, at least for low-income individuals or families or any other vulnerable group of population. Availability. Insurers and governments can work together as well to design policies tailored to underserved demographics. And in some cases, governments may also incentivize insurers to operate in those less profitable markets that we used to be far from, because at the end of the day, we are private entities that look for the benefit, as I said before, no? In terms of accessing to the insurance portfolio, governments or public administrations may invest in the necessary infrastructure, both from the physical and from the digital standpoint, to bring the insurance much closer to those underserved populations, for example, by integrating insurance in some, for example, public services platforms like post offices or community centers, so that way governments can ensure wider geographical access. Finally, if I may talk about the awareness, I know that from the private standpoint, all the insurance companies try to make a huge effort in bringing that financial culture or education that I referred before, but there may be also the possibility of some joint programs where both the public administrations and the insurance companies work together in bringing the population that culture in collaboration to increase the level of financial culture amongst all the populations.
Thank you very much. Great insights from Spain. Bob, what is your, as the largest US property and casualty insurer, what's your experience in dealing with government units in the US?
Well, we have a very positive relationship with our regulators across the country. And again, we believe that the best solution to ensure that there's available and affordable insurance at a reasonable cost is a competitive marketplace. We believe that competition is the best regulator of price, and we try to convince our regulators that when they attempt to fix the price through regulation, that's not typically a positive outcome and results in lots of market dislocations. But that doesn't mean we're against regulation. There needs to be a strong regulatory framework that promotes solvency and market conduct compliance, and consumers have to have complete assurance that insurers will keep their financial promises and be solvent. So that is the very most important area that regulators can help with. In terms of meeting availability and affordability issues where markets are dislocated, we work closely with regulators to develop strong markets of last resort in various jurisdictions. In the United States, these are auto insurance plans, the FAIR plans that help meet the needs of people who can't get insurance through the private market. I did want to circle back to the discussion we had earlier about the Fortified program and how they're using innovative grant programs to allow people to retrofit their homes to make them better. That's a good example of a public-private partnership that we think has great potential to help build resiliency and make properties more insurable and more resilient to loss in the future. So there's great opportunity to collaborate with regulators to help markets work better. We just think regulating the price isn't one of the ways to do that.
Thank you, Bob. Maybe before we open it up, a final question to Prudence, also in the same context of public-private partnerships. What is the specific role of a regulator? I mean, the regulator is obviously an expert in the field, and the government units with which we need to collaborate are not necessarily familiar with the intricacies of insurance and risk management. So, can the insurance regulator, for example, help building bridges between the private insurance sector and government entities? Or what other potential areas of support would you see for to be provided by insurance regulators? Would you see, Prudence?
Thanks, Kai. Well, yeah, you're right. I mean, for us, sometimes we redo the things like bridges. You know, for government, sometimes they not necessarily understand the, you know, insurance is always quite difficult to understand, I would say. But as what I said, just taking one of the examples, well, maybe the things that I'm also now working on is about mental health. The thing is, the insurance industry and sometimes the government actually they're complementary, helping each other. Because as what I said, just like in Hong Kong, the medical system, government taking up a big portion, private sector small portion. What we are doing in the middle is we really want to exchange their ideas. You know, sometimes I think the government also want the support from the private sector. Just like in our case, if the medical services is not supported by the private sector financially by insurance, I think the government burden will be getting larger and larger. So for us, IA, sometimes we have different workshop or task force meeting. We want to group together all the experts and also maybe also from the government, because they really need a platform, I would say, sometimes to get in touch with the people that are really responsible for the issues. So regulators can do this. And I think I can also share with you, well, not necessarily from Hong Kong, but also from the other jurisdictions, how PPP can work better in terms of the regulator. I think, you know, in Europe, most of the jurisdictions may be using RBC. So the risk-based capital regime, how to make it work or how to make it sustainable, I think for the regulator, we can also be a bit more kind in terms of the capital charge. So for insurance companies, they do better. They work harder on the inclusive insurance. Maybe in the capital charge, I think the regulator can be more generous or can be more encouraging to make them using this kind of things. I think also. Well, of course, not today's topics. I think just like climate, the climate issues, the green products, I think most of the governments or regulators, they're also trying to do much better ESG things. They will also use this kind of incentive. I think it's solvency to make it work. So this is also the role. I think the role of the insurance regulator can do better in this PPP.
Thank you so much, Prudence and Bob and Joaquin. Let me open it up for questions from the floor. We have received many excellent questions. So I have to make a selection. Maybe starting, you know, a question to you, Prudence, regarding mental health. You know, the participant here mentions a personal experience having been denied cover due to his or her mental history. It's not considered fair. What do you think can be done to ensure that insurers treat people with with a mental history more fairly?
Thank you. Thank you for raising these
Difficult
questions.
questions.
Well, I would say for this research, we met different parties from the medical field, from the insurance field, also from the patients group. I would say I understand the difficulties from the insurers because we always heard about one comment from them is they don't have enough data. So if lack of data, they don't know how to price the risk, and the simple way is to reject. But I agree with the comments from these questions. Not necessarily a very good is not necessarily a good way to handle something like this. I think one of the approach it could be for the people if they are only mild or common mental issues. I think maybe after a certain period of the proper treatment, when they're showing that very good mental health right now, it's okay. I think the insurance company can carefully think about to accept their applications. I understand insurers, every insurers, they are experts in doing risk management. But right now, as what I said, mental health is getting more a concern for people after COVID. I mean, everyone just experienced a very long period of the isolations or the fears about the health. I can imagine more and more people will suffer from mood distress or mental health issues. It is not so it is not really a good way to reject all the things. I think there should be a buffer in between. So, yeah.
Thank you, Prudence. Completely different question regarding the role of employers in supporting financial inclusion of older workers, so workers over 55. What is your perspective on that? Maybe starting with Bob and then Joaquin, and please answer as briefly as possible. Thank you.
Well, we're getting into an area that I'm not particularly equipped to handle with health insurance in particular. We do have an employer-based health insurance system in the United States primarily. There are individual markets as well. We do not, we go with an individual market with respect to property casualty products. So the employer does not play much of a role in the United States.
Okay. I see. Joaquin, do you have a perspective from Spain?
Well, we are developing a very wide value proposition for the segment of people 55 and over, just because they are still on time to get prepared for that long future that they have ahead, no? And employers are bringing a very important role as they are just bringing that information, at least here in MAPFRE. We are just trying to bring that financial education to our own employees because they are customers of MAPFRE as well, and they need to know what they have ahead, the tools or instruments that they have to protect themselves, their lives, their health, and they specifically design and develop products and services that we, as the largest company here in the market, have developed for our customers and for sure for them as well as employees of MAPFRE.
Thank you, Joaquin. Maybe another try, Bob, for you, concerning broker and agent remuneration. Given the lower pricing that will be needed for many inclusive insurance products, how can agents be encouraged to devote resources to low-cost insurance? Do you have a view on that?
Yeah, I think obviously the agent needs to be compensated for their efforts, but I think that the competitive market will hopefully provide opportunities for there to be competitively priced products that allow there to be options for customers, and obviously giving the agent an incentive to sell those products creates opportunities for that product to be placed appropriately with a product that meets that customer's needs.
Thank you very much. Unfortunately, it's time to wrap this session up. And I would like, again, to give the floor to the speakers and ask them to share with us their single most important takeaway from this session as briefly as possible, please. Joaquin, would you like to start?
Sure. Well, I would say inclusive insurance is not an issue that affects only to emerging economies, but it is a need in mature economies as well for segments of populations that are vulnerable, like the elderly, as I've been referring a lot. No, they need to have the culture and the financial education brought and much closer to them to protect their goods, their health, their lives at the end of the day, with instruments and tools available for them that we have created. No, we are luckily called to live a life of 100 years, and we need to be prepared in advance. We need to stay close to today's elderly to protect them and walk hand by hand the many years they have ahead with lower income but stable, and facing many new risks with much more expensive consequences they surely will have to face in the future.
Thank you, Joaquin. Prudence, what's your key takeaway?
Inclusive insurances will gaining more and more importance and awareness among the people. I hope that not only insurance companies, not only regulators, but all of the others, all of anyone in the world, keep the good awareness on inclusive insurance.
Very good. So, Bob, your perspective from the world's largest insurance market, finally.
Well, we're excited about the opportunities that innovation and technology bring to everything. We think that that will help solve a lot of these market needs, and it will take all of society, partnerships between government and industry to meet these needs. But I'm very optimistic that that these needs can be met through innovation and markets working in the way that they do.
Thank you very much, Bob, Joaquin, and Prudence, for sharing your insight with us. I would also like to thank all the participants, and again, apologies for being unable to accommodate more questions. And before concluding, please do us the favor and provide your feedback in a short survey that will pop up as soon as you leave this meeting. It is essentially important for us to continuously improve the quality of our webinars. Thank you very much and goodbye.